Hello everyone, welcome back to my channel. If you are new to my channel, please take a moment to subscribe and hit the bell icon so that you can be notified when I upload the next video. Make sure you are watching the video till the end because at the end of the video I will be sharing one fun fact with you all. So stay tuned. Alright, without wasting much time, let's quickly dive right into the world of accounts. Today, we will be learning some basic accounting terms. So make sure you are holding a pen and a notebook so that you can write down the important points which we will be discussing in our today's class. The first term is entity. What do you mean by entity? It means something which exists as a separate unit. In other words, we can say that it means an economic unit which performs certain economic activities. Now, what are economic activities? Economic activities involve all those activities which deals with production, distribution, and consumption of goods and services. So, entity means what? It means something which exists as a separate unit. In business, entity means a company or an organization. For example, Birla Industries is an entity. Reliance Industries is also an entity. Raymond is also an entity. Next up, we have events. What do you mean by event? Event means something which has taken place or something which has happened in business. For example, use of raw materials for production. The next term is business transaction. What do you mean by business transaction? It is an agreement between a buyer and a seller for the exchange of goods and services in return for money. It can also be termed as financial transaction or an economic transaction or an economic activity. The fourth term is voucher. What do you mean by voucher? Voucher is a documentary evidence in support of a business transaction. For example, in case of cash purchases, cash memos acts as a voucher. The next term is entry. What do you mean by an entry? Entry is the record made in the books of accounts in respect of a transaction or event. An entry is passed on the basis of vouchers. So I hope these five terms are clear to you all. We have discussed about entity, event, business transaction, voucher, and entry. Moving forward to our next term, that is capital. What do you mean by capital? Capital means the money which is being invested by the proprietor in the business. Here, proprietor means the owner. Any sum of money which is being invested by the owner in the business, that particular sum of money is known as capital. Now, in other words, we can also say capital means the excess of the assets over external liabilities. It is also known as owner's equity or net assets. Moving to our next term, drawings. What do you mean by drawings? Drawings means the certain amount of money which is being withdrawn by the owner from the business for his own personal use. That sum of money is termed as drawings. Next term we have assets. Now what are assets? Assets means the benefits which we get from our resources or property. Any item which gives us certain benefits, those items are termed as assets. Now assets are classified into three categories. We have current assets, non-current assets, and fictitious assets. Now what are current assets? Current assets are those assets where we get the benefit for a very short period of time, that is less than a year. For example, cash. Cash is a current asset. Stock is also a current asset because it can be easily converted into cash. Next category of assets is non-current assets, or we can also say long-term assets. These assets, they give benefit for a long period of time, which usually exceeds more than a year. Now these assets are again further classified into two, tangible assets and intangible assets. Tangible assets are those assets which can be seen and touched. For example, machine, equipments, land, building. These are some examples of tangible assets. Intangible assets are those assets which cannot be seen and touched. For example, goodwill, patent, copyrights, trademark are some examples of intangible assets. The last category of assets is fictitious assets. What are fictitious assets? These are those assets which does not have any realizable value. In other words, they do not have benefit in reality. For example, advertisements. Next term we have liability. What do you mean by liability? These are legal obligations or loan which a person or organization owes to another party. Now these liabilities are again classified into two types. We have current liabilities and non-current liabilities. What are current liabilities? Current liabilities refers to the company's short-term financial obligation which are expected to be settled within 1 year or within its operating cycle, whichever is longer. If I have to give an example of current liabilities, it can be bills payable or short-term loans. All right. Now, next category of liability is long-term liabilities. They are also known as non-current liabilities. These are those liabilities where it refers to the company's long-term financial obligations which are settled over a period more than 1 year. All right, more than 1 year they are being settled. If I have to give an example, it can be bank loan or debentures. They are the examples of non-current liabilities. The last accounting term is accounts. Now, what is an account? Account means the description, or you can say the summary of an event. That means the things which are being recorded as an event in the books of accounts are known as an account. So I hope you have understood these 10 basic accounting terms. If you found this video informative, please give it a thumbs up and share it with your friends and relatives. Alright, coming to our fun fact part 1. The fun fact which I have promised in the initial part of my video. Alright, did you know that accounting comes from French word compte, which means to count? So it means accounting is all about counting and tracking money. I hope you enjoyed the video. Please share it with your friends and relatives. Thanks for watching.